Well, welcome to Fed Week. This is a fun week for people like me because the Fed meets 8 times a year. The Federal Open Markets Committee is meeting tomorrow, Tuesday, and Wednesday to discuss interest rate policy, the latest around the economy and where they think things are heading. So it's going to be a really interesting week. I will just highlight it is a holiday shortened week because of Juneteenth on Thursday. Therefore, the markets are closed on Thursday. They will reopen on Friday. But I think all eyes are going to be on the conclusion of the FOMC meeting on Wednesday. So let's talk about that a little bit. Now, obviously, we always say that the market doesn't like uncertainty. We don't like uncertainty. But the reality is that there's always uncertainty. It's just a question of how much there is. I think that right now, there's just a whole lot of uncertainty. It's something that we're facing as investors. It's something that the Federal Reserve is facing as well. So it's going to be really interesting to see how they navigate this landscape. So we got inflation data last week. We saw that the inflation continues to move in the right direction. We've actually seen this for the last few months. And so a lot of people, specifically the Trump administration for one, are calling for the Fed to start cutting rates, really provide some relief to parts of the economy that are really feeling the pain right now. We could point to weakness in the housing market and lower income households. Now, that being said, even though inflation is trending the right direction, I don't think that it's enough for the Fed to go out and cut rates at the end of their meeting on Wednesday. I think that they're going to wait and want to see a little bit more evidence to be sure that this disinflationary trend that we've seen over the last few months can persist. I think things are really uncertain, and even though they're getting pressure from many outside the Fed, including the Trump administration, I think they're going to want to wait until they're absolutely certain about what things are looking like going forward. Let's talk about what some of those inflationary pressures are that the Fed is keeping an eye on, because I think they're important. And I think the Fed is in a really tough spot right now, so I don't envy their position. But let's just highlight a few of those reasons that they're not going to celebrate the progress we've seen on inflation just yet. Number one is immigration. Now, that's certainly in the news right now, but I think this is important for us, just looking at it through an apolitical lens that could impact the supply of labor and actually drive wages higher. The other thing that we're keeping an eye on is our tariffs. And we know that tariffs are inflationary, at least over the short term. And there's still a whole lot of uncertainty there. I believe it was actually on April 9th that President Trump announced that 90-day pause on the tariffs while they gave themselves some time to negotiate new trade agreements. So far, there's still a whole lot of uncertainty. I don't think a whole lot of progress has been made. And so for now, we have to assume that there will be some inflationary pressures, just to err on the side of caution. Now, another thing that I'm watching, I'm sure the Fed is keeping an eye on, is the fact that the dollar has been moving lower against major global currencies. This dollar depreciation is not the start of what many have called de-dollarization. We're not going to go that far, but I will highlight the fact that the dollar is down about 10% from its high in early January. And that is important because it only exacerbates the impact of the inflationary impact of all these trade-related issues. If the dollar is moving lower, that makes imports more expensive. The last thing I will mention, and this is really timely, is the fact that we've seen oil prices move quite a bit higher. Now, I think this is important for a few reasons. Number one is, even though I mentioned a few minutes ago how inflation has been trending lower, one of the big drivers of this disinflation we've been seeing is the fact that oil prices were falling so sharply over the last few months. Now, we've actually seen this trend reverse of late. This actually happened before the latest events surrounding Israel and Iran. But now it is certainly the upward move in oil prices has certainly been exacerbated because of the latest geopolitical events. And so we are actually seeing oil prices that are about 25% higher over the last few weeks, and still down a little bit from the January highs, but certainly moving in the wrong direction if you're trying to get inflation down. So these are the things that are on the Fed's mind. This is why I expect them to really take a more cautious tone here at this meeting that concludes on Wednesday. So those are some of the things that I'll be keeping an eye on during this Fed week. If you have any questions, please don't hesitate to contact your financial advisor. It's always a good idea to make sure that your financial plan is updated. And we'll have plenty to talk about next week, so please tune in, and I'll see you then.